Coming up, retail sales rises more than expected as shops increase promotional activity. So where are the bargains for consumers and the AI skills in demand? That's next. It is your daily 10-minute business and finance news wrap for this Thursday, the 29th of June, 2023. Later, we'll take a closer look at the artificial intelligence skills that are in demand in the workplace. But first, to retail sales, which rose more than expected, 0.7% in May. That's despite the rising cost of living. For more, I spoke with Paul Zahra. He is the CEO of the Australian Retailers Association. Paul, retail sales have continued to climb despite cost of living pressures, although they are down from that peak that we saw in November 2022. So how would you describe consumer sentiment at the moment?
It's been a really tough environment for consumers and for business, I might say. So there's a collision of this cost of doing business crisis and the cost of living crisis, but it all starts with the consumer. There's no doubt they've had to make that household budget go further, and that's creating a lot of anxiety and stress. And we're seeing people struggling with their interest rate rises and utility price increases. So they're actually looking at ways to make that dollar go further. And as a result, people are generally shopping down and looking for value and promotional activity to make sure that they get the best deal possible.
I want to go into that with more detail. And there was an interesting line in the ABS release today saying that the rise in retail sales reflected some resilience in spending, with consumers taking advantage of larger than usual promotional activity and sales events for May. So what kind of promotional activity are we seeing? And what is the purpose of this promotional activity?
Well, of course, the ABS data that was released today is about a month old, and we're getting anecdotal information from the retailers on how they're trading. So we did see a lot of promotional activity in May, more than usual. So wider discounting, deeper discounting as a result. And in essence, I think retailers panicked because they could see that sales were actually slowing down, and as a result started to discount to stimulate sales. So whilst overall the numbers look pretty good, so clothing particularly and department stores results were great, most of it was driven by discounting to get people through the door.
Are retailers at all seeing a change in consumer behaviour at the moment? For example, are they becoming savvier with their shopping? Are they only buying during sales time? And are they trading down?
Definitely. So we're seeing in a supermarket environment, we're seeing consumers trading down to private label product to get, again, the best deal possible. But in the discretionary sector, they're waiting for absolute discounts. So they're seeing retailers competing to get customers or win customers over. So they're definitely shopping on price and wanting to, again, make sure that they get the best out of their dollar.
It would seem consumers are now bringing forward when they're spending. So instead of waiting, I guess, for these half-year sales, they might be buying at a Mother's Day event or whenever there's an online special like a Click Frenzy. What's the outlook for retailers if that is a trend, when consumers are spending earlier? Like you mentioned, if they panic, if those retailers panicked and they press the sale button early.
Well, what it does mean is it's not great for the retail industry because they're selling items on a less of a margin, but they don't really have much of a choice because they bank the gross profit dollars, not the percentage that they're selling it at. So it's so important for them to actually get those dollars through the till. So it's a great outcome for consumers. So consumers will get better deals during these times if you've got spare cash. But of course, that spare cash is dwindling. So there's this collision, as I mentioned before, it's a perfect storm. So if you've got money to spend, if you're one of those lucky people that don't have a mortgage and are not renting, and that tends to be the cohort of the 50 to 64-year-olds who have actually set themselves up, they've got money to spend and they're spending more. But the majority of Australians actually are under significant pressure. What we know when we did our a survey with Roy Morgan, about 400,000 Australians said that they wouldn't shop during the mid-year sale. So that's really concerning. So less people shopping. Those that are shopping are spending a bit more, mostly because they either got the cash or they're actually due to price increases. So it's quite unprecedented in all my history in the industry to actually see this collision between, we've either had one issue or the other. We've got both happening, which is the cost of doing business and the cost of living crisis hitting at the same time.
Two final questions. For those consumers that are able to spend, do you think there will be continued promotional activity? And given that you do have an insight speaking to so many retailers, do you know in which kind of areas there'll be some pretty heavy discounts?
You're after the best deals here, I can see, but it's very as simple as this, because if you think about it, retail, if it's a seasonal product, that's where you're going to find the best deal. So if it's clothing, which is generally has a winter theme or a summer theme, you will find there the best deals, because simply retailers need to get out of that merchandise before the next season arrives. So discounting, particularly in clothing, footwear and accessories, will be prevalent over the next few months as we transition into summer. And obviously in food, that's less of an issue. So we'll constantly see this battle at the supermarket shelves around actually promotional activity to drive volume. So if you're looking for the best deals, look out for the promotional activity, because there'll be a lot of it. It's a really good time to spend if you've got the money.
Final question. Reserve Bank Board meets next week to discuss interest rates. We saw the inflation number yesterday come in a bit softer than expected, 5.6%. These numbers still show that consumers are still spending, although not at levels like before. What would another rate rise mean for the industry?
Look, if there was another rate rise, these rate rises they do have a lag effect, but it would be, I wouldn't say catastrophic, but certainly exceptionally a big blow to the industry, because every time you shop in a store, you give somebody a job, and what we're concerned about right now is sales are declining. We have to reduce staff hours, and that's not great for the broader economy.
Paul Zahra there, the CEO of the Australian Retailers Association.
Now, Market Day on the SBS On the Money podcast.
Pretty flat day for the Australian share market. The S&P ASX 200 down only 0.02%. That's 1.6 points, 7,194. Not a big change, but there were some movements in the retail sector. For that and more, I spoke with George Boubouras. He's the head of research at K2 Asset Management. George, following on from today's retail sales numbers, it would seem discretionary stocks, or some discretionary stocks, are doing pretty well today. The likes of Domino's, Lovisa, Eagers Automotive. Why? Because how much does it have to do with those retail sales numbers, which came in a little stronger than expected, and how much with the market's thinking with what the RBA is going to do with interest rates next week?
Yeah, it's a great question. Balancing act. The retail sales very quickly, much stronger than expected, and reinforces the resilience of the underlying economy, notwithstanding that the mortgage higher rates are having an impact. But the resilience of the tight labour market, most people are employed, record low unemployment rate, leading to discretionary retail doing well in some parts. And remember, it's been selling off. It's been a weak sector for the past couple of months or quarters. And it's a bit of a relief rally, notwithstanding that Eagers Automotive has been strong year to date. But those retail sales numbers show a couple of things very quickly, and that is they're running down inventory, discounting going into 30 June. But it does show that there's a robustness in the economy, and it all points towards additional rate hikes or rates remaining these higher levels for longer.
The market has been moving in and out of positive territory today. Why? What's driving it?
Combination of will the RBA raise rates next month or will they not? The headline inflation number was quite low. However, the core inflation number is quite elevated, and those strong retail sales. So it's a little bit divided whether the RBA should go next month or not. But there's enough information there for the RBA. If they pause next month, they're going to go again in the next few months and remain at these elevated levels for a period of time well into 2024.
Finally, where do you see the opportunities for investors?
For investors, still overseas, Japan, Southeast Asian stocks as equity markets. North America, the technology rally in North America has been quite strong, just like the technology sector rally in Australia has been quite strong year to date, cloud-based, AI, etc. So generally people are looking through the slowdown of the global economy. There is resilience in the Western world, and that is being priced into the equity markets, and that's why they're staying elevated levels versus some people's expectations.
George Boubouras there from K2 Asset Management. And before we wrap up, let's talk about artificial intelligence, because those people who have AI skills are likely to be highly in demand and be able to demand higher pay. Charlie Page spoke with Erin Devlin from the Recruitment, Consultant and Staffing Association for more.
Erin, thank you so much for joining us. So what can you tell us about this trend that we're seeing for those who do have AI qualifications?
So what we're seeing, Charlie, is definitely an increase in the demand for AI qualifications and skills within AI. And this is not just in roles that are specifically integrating and building AI within the workplace or within communications, but it's also in everyday jobs. So administration, whether it's marketing, communications, we're seeing employers look for those skills.
And are we seeing that demand here in Australia being matched by what's being seen internationally?
Yes, we are seeing it very similarly in Australia as it's happening internationally. In fact, in some countries, we're seeing that some of the employees are much further ahead in terms of their knowledge of AI and their skills within AI, because countries like Australia have actually been outsourcing for a long time these sorts of skills. So I know for us, we've been utilising AI, on our website for the better part of 7 or 8 years, and that's been a skill that we've outsourced from overseas. But now employers are really wanting that onshore in here in Australia as well.
What kind of jobs can people be getting if you do have that AI experience? And what kind of a difference in salary can you expect if you do have an AI qualification on your resume?
If you're working in an area such as marketing or technology, so you're actually developing some of the technology behind the scenes in website development or app development, then those areas, it's almost a given that you're going to need to have that in the next 12 months to 2 years and beyond. So it's really becoming a core part of those back-end website and app development roles. But even more mainstream marketing positions, communications positions, employers are really starting to ask for those skills much more. It's very similar, Charlie, to if we think back to when UX came on the scene, 10 years or so, being a really popular skill to have. At the time, it was quite new and salaries really got inflated in that space. And then as people acquired those skills and it became a lot more mainstream, that's when we saw the salaries level out. And that's a little bit what's happening now with AI.
Erin Devlin, thank you so much for your time. We really appreciate it.
My pleasure. Thanks, Charlie.
That's Charlie Page there speaking with Erin Devlin from the Recruitment Consultant and Staffing Association. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.